So let us get real for a second because most of you are looking at the news and feeling like you are losing your mind. The world feels like it is falling apart, and yet the stock market is hitting new all-time highs every other week. I am 27 years old and my net worth is $124,560. And I did not get there by listening to mainstream financial advice. I got there by understanding how the game is actually rigged against you, and today I am going to break it down. We are going to talk about why asset prices keep going up while your living standards keep falling into the basement. I am talking about why the US stock market and the Japanese market and even gold and silver are going mental while you are struggling to pay for eggs. If you are not yet a subscriber, click that button right now so you don't miss these weekly reality checks. Let us look at the S&P 500 because it is the ultimate indicator of this insanity we are living through. We are sitting here in 2026 in the middle of global conflicts and economic destruction, and yet the markets are higher than ever. Japan and the US hit all-time highs just days ago, and the UK market is up 21% in a single year. Spain is up 32%, and gold has gone up nearly 100%. In the last 2 years alone, most people are confused because they were told that when the economy is bad, the stock market should go down. That is a lie they tell you in school to make you think the system is fair, but the last 20 years have proven the exact opposite. In 2008, we had the credit crisis, and what happened in the long run, asset prices went up. In 2011, we had the sovereign debt crisis, and asset prices went up again after a tiny dip. In 2020, we had the pandemic, and we saw the biggest surge in housing and stocks in history. Why does an economic crisis always seem to push the price of things you want to buy out of your reach? The simple story they give you is about interest rates and how they slash them to zero to save the banks. When interest rates are at 5%, $1 million in the bank gives you $50,000 a year in interest. If a house also gives you $50,000 in rent, then that house is worth about $1 million. But when the government slashes rates to 1%, that same $1 million only gives you $10,000 in interest. To get that same $50,000 return from a bank, you would now need $5 million. So suddenly that rental house or that share of a company becomes 5 times more valuable relative to cash. This was the narrative for a decade, but then something even crazier happened after the 2020 mess. Inflation spiked and interest rates shot up from 0 to 5% very quickly. According to the old theory, asset prices should have collapsed because cash was finally worth something again, but they didn't collapse. They kept screaming higher and hitting new peaks while you were getting squeezed at the pump. I correctly predicted this would happen back in 2020, and I made a ton of money by betting against the common logic. The real driver of this madness is not just interest rates, it is deficits and the distribution of wealth. When the government runs a massive deficit, they are essentially printing or borrowing money to throw at a problem. In 2020, the deficits were mind-blowingly big, like $40,000 per adult in some places. When the government runs a deficit of that size, somebody has to accumulate that money on the other side. My background is in looking at inequality, and I wanted to know who was actually catching all that cash. The conclusion was obvious, and it has been proven right over and over again. The richest people in the country got it when you give an enormous amount of money to someone who already has $20 million. They don't go buy more milk. They are not cash constrained. So they don't increase their spending on normal goods. They buy assets. They buy up the stocks and the real estate and the gold, because that is what rich people do with their money. We have a playbook now where the government borrows money from the rich to resolve a crisis and then gives it back to the rich. This massive redistribution of wealth happens every single time there is a global emergency. Every crisis ends with a pile of cash sitting with the top 1%, and they immediately use it to bid up the price of everything you need. That is why you saw asset prices and interest rates going up at the same time, which is not supposed to happen in a fair world. But this is not a fair world, and you need to stop associating high stock prices with a strong economy. High asset prices are actually a symptom of an economic weakening because it means ordinary people are being priced out of life. If you can afford a house and your kids can afford a house, then the economy is not doing well. It is cannibalizing itself. Expensive assets are the direct consequence of your falling living standards and the extreme inequality we see today. I remember being 22 years old and making $45,000 a year thinking I was doing okay while the world was passing me by. I was driving that 2006 sedan with a broken radio while billionaire net worths were doubling in a single year. I realized that if I didn't become an owner of assets, I would be a slave to the system forever. I chose to live in an empty apartment for a year because I wanted to buy VU and VTI while they were being pumped by the rich. If you can beat the redistribution, you have to at least participate in the ownership side of it. Governments are going into massive debt to the rich just to keep the lights on, and it is not sustainable in the long run. We are reaching a point where governments are powerless to protect you because they have given away all their leverage. When you see a politician bragging about the stock market, you should look at your own bank account and get angry. The high price of gold and stocks is the canary in the coal mine, telling you that the rich are getting subsidized by your future, but I am not here to just complain. I am here to tell you how to survive and how to eventually win. You have to recognize that your savings account is a financial suicide note in an era of 3.8% inflation and massive deficits. If you are holding all your wealth in cash, you are the one paying for the party that the billionaires are having. I am 27 and I have $124,560 because I refuse to be a victim of the currency devaluation. I put my money into the very things the rich are buying because I want to be on the winning team. I utilize a dollar cost averaging strategy into broad market index funds because it is the only way to catch the wave of this redistribution. I don't try to outsmart the market. I just try to own as much of it as possible before the next crisis hits. Because you know as well as I do that, there will be another crisis and the government will use the same playbook. They will run a deficit, they will bail out the institutions, and the rich will end up with more assets while you end up with more debt. The only way out is to stop being a consumer and start being a stone-cold investor. I chose the S&P 500 over a new car, and I chose dividends over expensive dinners because I wanted my time back. Every $400 I get in passive income is one more brick in the wall that protects me from the madness of the world. You need to build your own wall, and you need to start today before the gap between the owners and the workers gets even wider. The resources are all still there, but the distribution is what is broken, and you have to play the game as it exists, not as you wish it was. If the government is going to keep giving money to the rich, then you better make sure you own the things the rich are buying. That is why I am buying Coinbase and TRX and why I am staying heavy in VO and VTI. Despite the volatility, I am not betting on the economy. I am betting on the fact that the people in charge will always choose to protect asset prices over your savings. It is a hard truth to swallow, but once you accept it, you can actually start to build real wealth. Don T, listen to the people who tell you to play it safe, because playing it safe is the riskiest thing you can do right now. Your safe savings account is losing value every single day, while my brokerage account is growing with the tide of inequality. It feels dirty to say that, but I am the hard-headed older brother who is going to tell you the truth even if it hurts. I want you to be the one with the $124,560 net worth in your 20s so you never have to beg for a raise again. I want you to look at a market dip and see it as a clearance sale on your future freedom. We are winning because we are awake and we are taking action while everyone else is distracted by the noise. Send this video to anyone you know who is still keeping their life savings in a checking account and tell them to wake up. We are going to keep fighting for a fairer system, but until that happens, you have to protect yourself and your family. Taxing wealth and not work is the long-term solution, but owning the wealth is the short-term survival guide. I am going to keep sharing every single move I make and every dollar I earn, so you can see the roadmap, subscribe to the channel, and let us keep building this freedom fund together because no one is coming to save us. We have to save ourselves by being smarter and more disciplined than the people who want to keep us broke. I will see you in the next video where we dive deeper into the specific stocks that are benefiting from this cycle. Stay disciplined, stay consistent, and always remember that ownership is the only way to true independence. Peace out, guys.